When we talk about how Denmark's personal taxes stack up across Europe, it's easy to jump straight to the headline that Denmark is one of the highest taxed countries in the world. While that statement is broadly true from a headline perspective, the underlying story is more nuanced, and understanding it properly requires looking at what gets taxed, at what level, and what citizens receive in return. In this video, we'll walk through the key elements of Denmark's personal tax system, compare it with other European countries, and highlight what individuals and employers should keep in mind when considering Denmark as a place to live and work. Let's begin with the basic structure of Danish personal taxation. For individuals, the system combines state tax, municipal tax, labor market contributions, and, for higher earners, a top bracket or top tax component. The Danish model is progressive. As income rises, the marginal tax rate increases, and at the top end, the combined marginal rate can reach around 55%, depending on the municipality. That places Denmark firmly among the countries with the highest marginal personal tax rates in Europe, alongside nations like Sweden and Portugal, and ahead of major economies such as Germany, France, and the United Kingdom. However, looking only at the top marginal rate can be misleading. Most people do not pay tax at the very highest rate, and when we examine average effective tax rates, the share of total income actually paid in tax, the picture becomes more balanced. Denmark still ranks at the higher end, but the gap with peers narrows, particularly for middle-income earners. The second important element is social security contributions. Many European countries pair moderate income tax rates with high and sometimes regressive social security contributions that are split between employer and employee. In Germany, France, Italy, and Spain, for example, social security charges can be substantial and continue to rise with income, often up to a contribution ceiling. Denmark stands out because social security contributions are relatively modest and largely financed through general taxation. Employees pay a labor market contribution, but beyond that, the system relies far less on payroll-style levies than many of its European counterparts. When we adjust for this, the total tax wedge, the combined burden of personal income tax and social contributions on employment, remains high in Denmark. But the difference versus other high-tax countries becomes much smaller than headline income tax rates suggest. Third, we should consider what these taxes are financing. Denmark channels a large share of its tax revenue into universal welfare state services, comprehensive public health care, tuition-free education, including universities, generous parental leave, and relatively robust unemployment and pension schemes. For residents, this means that many expenditures that are private in low-tax systems, such as health insurance premiums, student loans, and in some cases childcare, are substantially reduced or effectively replaced by public provision. From a purely financial perspective, an individual earning a similar salary in Denmark versus, say, the UK or the Netherlands may see a higher deduction on their payslip, but also face significantly lower out-of-pocket spending on essential services. This interplay between higher taxes and lower private spending is crucial in any meaningful cross-country comparison. Another dimension worth highlighting is the predictability and simplicity of Denmark's tax administration. While no tax system feels simple in practice, Denmark scores relatively well on transparency and digitalization. Most income information is pre-reported by employers and financial institutions, and individuals typically confirm or adjust their annual tax return online with limited friction. This stands in contrast to some European peers where complex deductions, family allowances, or regional surcharges make compliance more burdensome for taxpayers and employers. For internationally mobile professionals, the key question is often not just how high are taxes, but what incentives exist to offset them. Denmark has introduced targeted schemes to attract foreign talent, including a favorable tax regime for high-skilled workers recruited from abroad. Under certain conditions, these individuals can be taxed at a lower, flat-rate scheme for a limited number of years, improving net take-home pay relative to the standard progressive scale. When benchmarked against similar expat regimes in countries like the Netherlands or Sweden, Denmark is competitive, particularly for senior specialists, researchers, and executives. It's also important to recognize that Denmark's tax philosophy is closely tied to its broader economic and social model. The country combines high taxes and strong social protection with a flexible labor market and a business environment that consistently ranks near the top of global competitiveness indices. Corporate tax rates are moderate by European standards, and the overall regulatory environment supports entrepreneurship and innovation. This mix, high personal taxes, but a predictable and efficient framework, can be attractive to both multinational companies and individuals who value stability and public services. So, how does Denmark stack up overall when we compare it with the rest of Europe? On headline personal income tax rates, Denmark is clearly a high-tax jurisdiction, especially for upper middle and high earners. On the broader tax wedge, including social contributions, it is still high, but not dramatically out of line with other Western and Northern European welfare states, and in some cases compares more favorably than public perception suggests. On the benefit side, residents receive extensive public services that offset some of the higher taxation, both financially and in terms of quality of life. For individuals considering relocating, the decision often comes down to values and lifestyle. Are you willing to trade higher immediate net income for greater security, public services, and social cohesion? For employers, the key questions are talent strategy and total cost of employment. While the gross-to-net calculation in Denmark can look demanding, the overall package, high-quality infrastructure, strong human capital, and an efficient public sector can make Denmark an attractive hub in a European context. In closing, Denmark's personal tax system is not the lowest and is unlikely to become so. Rather, it is designed to support a comprehensive welfare model that is deeply embedded in the country's economic and social fabric. When assessed in isolation, the numbers appear high. When viewed in comparison to peers and balanced against what citizens receive, the story becomes more complex, and for many individuals and organizations, more compelling. Understanding these trade-offs is essential for anyone evaluating Denmark as a place to live, work, or invest within the European landscape.